Good evening and welcome to tonight's live webinar where we look at ASX investment opportunities in review for the 25th of May. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals offers a broking account based on model portfolios, including the ASX 20, 50 and 100, the US S&P 100. We also have ASX and US high conviction portfolios which pick up the ideas expressed on the blog. We have a new ETF iShares model portfolio. Within this broking account, we also run an independent portfolio where we can work in partnership with you to execute ideas that we jointly agree on, and we have the ability to run derivatives. So, for example, selling covered calls over stocks to enhance the income. And if you'd like to know more about the Investor Signals broking account service, please contact me 1300 614 002. Visiting the Investor Signals website, there's three main products. Our research, which is the Investor Signals member area, which is the technology that I'll be demonstrating this evening. You can sign up for a combination of the research and the technology for $1,320 for a year. Our broking account service, which we just covered, or the managed funds. So again, if you'd like to know more about any of those services, please contact the office. As I mentioned, the technology that I'm using tonight, you can become a subscriber to it for $1,320 for the year. The table up on screen here is just something worth keeping in the back of your mind, and for those that are joining for the first time this evening, I'll just quickly recap on what we're looking at here. This is the annual earnings, the annual average earnings for the S&P 500 companies. And what we've been focusing on is coming into the correction that we've had this year. S&P earnings were tracking at about $160 of earnings on average for 2018 and 2019. So we know 2020 earnings are going to be less than last year, but by how much? And we're going to soon get a sense of what impact the June quarter has had, which has captured obviously the bulk of the economic impact from COVID related shutdowns. So in that first week of July, we're going to see what those June quarter earnings look like. At the moment, we've sort of got through the March results. Companies have withdrawn all guidance, and to some extent the market's flying a little blind in regards to what this quarter earnings look like. But the bridge that's been formed by the central bank with stimulus, the market is increasingly looking at 2022 as a normalization period for earnings, and an expectation that not next year but the year after we'll be back at this $160 of earnings per share. So if that's the assumption, if the economy can reaccelerate in the back half of this year, but certainly next year, and then pick back up to pre-COVID levels in 22, that supports an index level for the S&P at around 3,000 points. I think it's fair to sort of recognise that these were good times, and there is every chance that earnings actually consolidate at lower levels than this for a longer period of time. And can the market remain up against sort of the resistance or the highs in the face of upcoming June quarter earnings? And these are all questions that obviously investors are asking and trying to form a view around to shape where fair valuation for the markets are. The technology area has been a leading indicator for market. It's been a source of strong earnings growth within cloud software services, etc. And the recovery and the bounce back in the Nasdaq, we're now getting up to a level where it's switched to sell conditions, and we're monitoring this to see when price moves back down below the short-term average. And I'll start this evening's charts when we get into the member area software with a look at the Nasdaq, a closer look. So in doing that, we go to the watch list. We come down here. I've loaded the Nasdaq and the S&P into my watch list. So Nasdaq's up there at the top, and this is the pattern that we're watching at the moment. So we're mindful that there's a price gap in the Nasdaq back up to roughly 9,500 points. At the moment, the index is still above the short-term moving average, but as we move into maybe the back half of this week, we'll start to see the price maybe trade below this average, and it might be sort of one of the first signs that we're running into resistance and the market starting to roll over a little. So we'll continue to watch that a lot closer. When we look at the domestic market, the Australian market's obviously not bounced back as quickly as the US, and one technical view of the market is it's just starting to push above that resistance there of where it sort of ran up a couple of times. And when you sort of look at this as an ascending triangle, are we in the early stages of a breakout? Well, it may be, but probably only in the order of another 100 points or so, given that on probability the Nasdaq is going to run into resistance, and it's just an earnings issue that as we move into that June result, as we get closer to that coming through, it seems plausible that the market at some point starts to take a bit more of a risk off type attitude or position coming into those June results. So the Aussie market could bump a little bit higher, and there are stocks that we want to focus on tonight on the long side, but keeping in mind that sort of we've got that sort of cautious backdrop there with the US equities. So next, what I want to do is go in and have a look at the stocks that we've posted on the blog. So again, into the watch list, come down to the bottom here, recent blog posts. This stores the last 30 days of stocks that have been tagged on the blog. So click on that, get the percentage gains to the top, organize it in buy signals, and let's just move through these. So Ampol's the old Caltex business, and we've seen this as a sentiment play as people return back to work, that naturally Caltex is going to be a beneficiary of business conditions returning to normal, and from a sentiment standpoint, Caltex has started to, or Ampol has started to pick up. At around this $26.50 to maybe $28 is where we see full value for the time being until we get more earnings certainty as to what the picture looks like there. Again, you'll recall that there was a takeover bid on the table at around $34 there for Caltex, the old Caltex business. So we'll continue to monitor whether we get a re-engagement around that takeover process. But the downside risks are relatively low here, and we're seeing further strategy from Ampol with obviously separating their real estate investment side of it away from the retail side, and it'll be on a lease back arrangement. So the spin-off of the real estate investment trust side of it will help to unlock value for Ampol shareholders, so that continues to remain sort of a bullish story there, even without the takeover offer proceeding. Alumina, high risk down here, but it's one that I've flagged on the blog. It's under buy conditions. We've got support here around 138. A break below that, I'd become a bit more cautious, but it's certainly a high risk position and not an overweight allocation in portfolios. All the major banks, we've remained cautious on these, and we saw the IMF come out over the weekend and indicate that the large global banks need to suspend dividends. So I put a post on the blog this morning about Citigroup as an example. It seems to me that we're in an environment where the full magnitude of non-performing loans hasn't really been taken into account, and that's supported by the comments from the IMF. They're wanting the likes of Citigroup to suspend dividends. We've seen dividend cuts here in Australia, and we've seen some discounted rights issues, but we're probably likely to see further capital raisings over the coming months, and I suspect that maybe around that July-August period the Aussie banks have to raise further capital, but bumping along sideways, but still pressure to the downside at the moment for the banks. Newcrest, we like these gold stocks. They've performed very well in a short period of time, so it's understandable that there's an opportunity or a temptation to lock in the profits where they are at the moment. They're probably due for a consolidation and a bump sideways. Maybe the next catalyst for gold rallying would be if there is a risk-off period in equities as those June quarter earnings results come through. So maybe the gold stocks bump sideways but have the potential to rally again around that sort of late June, early July period. So we're comfortable with Newcrest. We like it. Coal. So this is one that I've been regularly updating on the blog. We've had a correction from $18 down to $15. From a risk reward standpoint, owning Coles here, letting it rally a little bit higher and then selling covered calls, you're getting almost 10% income from the dividend plus the call option income with relatively low risks to the downside. So we like Coles at this $15 level at the moment. Woolworths, again, correction from 43 down to 34. We think that looks compelling. Obviously, the pubs and clubs side of the Woolworths business, which is not substantial, but sentiment-wise, I think it's enough to sort of drag the share price down to where it is at the moment. But we do ultimately see a recovery in that area of the business. At $34 again from a risk reward standpoint, owning it here, looking for a small move higher back up to say $35, $50, $36, and then selling covered calls to generate that 10% cash flow. In a low interest rate environment, those strategies make a lot of sense. Northern Star Resources, so again, here's an example where you may choose to lock in profit on Northern Star and hold Newcrest, but these gold stocks have performed very well, and in the case of Northern Star, the same as Newcrest, it probably consolidates, moves sideways a little, and then if we get that risk-off period as the June results come through, maybe gold can rally again in that environment. BHP and Rio, iron ore demand continues to be strong, and there are supply concerns, obviously, with the issues in South America at the moment. All the data indicates that the demand for iron ore from China remains strong, and iron ore prices have moved from sort of the low 80s up to the low 90s to mid 90s at the moment, and a combination of iron ore being strong and energy prices recovering supports BHP. So if you're looking for stocks within this market to remain on the long side until such time as that Nasdaq indicator turns back down, which may be the beginning of a profit taking or a risk off period in the market. Both BHP and Rio were comfortable sitting on the long side of those trades. So there's Rio. So Rio at around this anywhere from $90 to $93. I think it's had a good rally. It's pulled back a little. There's an opportunity to buy into Rio just above that $90 there. Orica, we like this. So we've identified the support there at around this 15.30. It's trending higher. And I'll just pause to focus on sort of a shorter term picture here, and the relevance of this is the next segment where we look at the new technology around the trade table. It'll start to sort of lay the foundation for the logic behind that. So what we're looking at here is stocks that have under algorithm buy signals but have then had the positive pivot point to support the uptrend beginning, and then further confirmed by the current share price trending above the average. And the idea of that is, as we see, say, this example here, is we're trying to capture short-term trades where the stock breaks out and trades above the average for anywhere from 2 to 10 days, maybe 20 days type period, and then you're getting back out of it. So the trade table sort of got a three rule basis to its indicator: the primary algo signal, the secondary signal, and then a momentum filter as well. So when I get to that trade table, we'll look at that a little bit closer. But Orica had no trouble raising their capital at, I think it was around $19-20 a share. Um, so the balance sheet's been de-risked, and the mining industry continues to remain strong, and Orica, I think, could trade back up to sort of that $18 to $19 range without too much trouble. So happy to sit on the long side of that with momentum there above the moving average. Now Telstra at $3, we like this, finding support down here and trending higher. So both Telstra and TPG, we like both of those at the moment. InvoCare, we've kind of missed the rally here. We're looking for this to come back down below this 950 level, or 960. We're looking for a trade back down around 950, and it's really started to recover since then. Again, they had no problem getting away their capital raising to shore up the balance sheet. As business conditions normalise, maybe we see InvoCare back up to around that $12 level, but we're not doing too much there at the moment. NAB, we remain cautious on these banks. Cochlear, so this is one that we focused on with support here at 175, and you can see the stock building on top of that support. So both Cochlear and ResMed, we think there's an opportunity to add both of those into portfolios at these levels. Cleanaway, we like this, so this is a defensive name that's one of our preferred holdings at the moment. So again, as the economy reopens and there's some normalization, we see the downside risks as relatively low for Cleanaway, and the long-term fundamentals for the business support higher share prices. So we continue to be a buyer of Cleanaway on any pullback. And you can see there the momentum's carrying Cleanaway higher. Sonic Healthcare, so getting up towards the top end of its valuation range, but we're bullish on Sonic throughout these higher low formations, and up at around this, whether it's 28 to sort of this 29.50 range, we expect it to run into resistance until we see more certainty as to what the earnings impact of this COVID related period looks like on Sonic. Now Macquarie, the concern with Macquarie was coming into this period, we saw a 24% fall in their earnings. But yeah, if global markets are going to continue to grind higher, BHP, Rio and Macquarie, these are stocks that you could look at with fairly tight stop losses. If you see the Nasdaq roll back over and BHP, Rio and Macquarie come back below sort of these recent average, then you could get a little more cautious or a bit more defensive on them. But for the time being, I think Macquarie looks like it's wanting to move a little bit higher. TPG back up near full value here, so we were buyers of this at lower levels at around this $7, but back up at $8. A little like Sonic, we're seeing sort of a fair bit of that upside positive surprises captured in it. Lendlease, you're starting to see some of these stocks that have been left behind now start to rally in the market, the likes of QBE, Lendlease. We've discussed Lendlease a number of times. The long-term fundamentals for this business are very good. What impact a recession or recessionary-like conditions have on Lendlease, obviously is of greater concern. So from a shorter-term trading perspective, I've put support level here at around 1080. A break below that's obviously going to be negative. If you're really looking at it from a shorter term perspective, as long as the stock trades above this short term average, it continues to move higher for the coming few days. But certainly a break back below that $11, we get a bit cautious on Lendlease, but at the moment comfortable on the long side of that. James Hardie and Boral, we continue to like the longer term recovery themes here in James Hardie. Made support there at around 1750 and pushing back up to where we would think for the time being is fairly close to full value. Star Entertainment, so these are all stocks that are flagged on the blog as buy opportunities, and in the case of Star, only a few days ago we looked at bouncing off support there at 250, moving higher. It's trading above the average, so you could keep with that momentum short term. CIMIC, not very often, again we focus on stocks that are under sell conditions where we're buying it, but in the case of CIMIC, we think the adjustment from $50 down to $20 reflects the problems that they've had in the Middle East, the $1.3 billion that they had to write off to clean that up, the refocus of the business on Australia, New Zealand and Asia, and we're comfortable that they're in the right space there around infrastructure, where we're seeing government and private spending increase in that area, and CIMIC should be a beneficiary of that. So we like this. Again, a break back below 21.30, be cautious on it. For shorter term traders, it's above the moving average, so if it tracks above that for the next few days, you could stay with that trade. But certainly for investment portfolios, we continue to like the long-term fundamentals there. Aristocrat, so here's an example of where we've switched from a stock under buy conditions into a stock under sell conditions. So Aristocrat shifted to an algo sell signal. I've put the resistance in line there at around 27.70. We've seen the short-term stochastic indicator and momentum indicator turn negative, and we're just starting to see the price now trade below the moving average. So if you're looking at short trades in the market, this is something just to focus on, where you'd sit on the short side of the trade as long as price sits below that moving average, and look for a short number of days where it moves down below that average. So I'll keep you updated on the blog with regards to that. Incitec Pivot raised money, so I think $600 million. Again, had no trouble with that placement. At around 190, I'd start to just keep an eye on this, that it maybe finds support and trades back above that average there, and you get these momentum indicators turning back up again. So fundamentally, we don't mind the outlook for Incitec and Orica. Computershare running into resistance. Again, it was under buy conditions, a stock that I spoke about on the blog that was likely to move higher. But at around this sort of $13 to $14 level, I think it starts to run into resistance within that range, and we look for the price to break down and come back below the moving average, and these shorter term indicators to turn negative as well. Crown Resorts up against resistance where it is there at the moment, and that's back to the beginning with the stocks there on the blog. So what I want to do next is have a look at this trade table. So this is a new feature available on the blog or in the members area, and the way this works is it looks at that second and third indicator as a filtering process. So for example here, we've got the ASX top 20, and we're looking for stocks that on the long side are supported also by the secondary and third indicators also showing positive signs. So if we look at the stocks that fall into that category, Westpac, so let's take a closer look at Telstra, given that's one that we're focused on the blog. So it's under algorithm buy signals, and we're also now starting to see a positive pivot point indicator, and we've got today's price above the moving average. So from a short-term momentum standpoint, momentum's now moving in a positive way there on Telstra. Likewise with NAB, but the stocks here as I move through these that of interest, IAG. So this at 550, IAG was probably starting to get fairly cheap, and we now see the price crossing back above the average. And for shorter term traders that are looking for opportunities in the market over a week to 10-day type period, using this trade table gives you an opportunity to find stocks that have that short-term momentum in it. So again, this is not a core part of Investor Signal's business. Our main approach is running longer-term investment portfolios concentrated on top 100 stocks, but we do get a number of inquiries about shorter term trading, and we've built this tool to help filter the large list of stocks. So it will go from the top 20 into say the top 50 as example. If you're trying to filter those top 50 companies to find the stocks that have cross back above that average and also have that positive pivot point, here they are. So down to where the double arrows. So from this point down from AZJ, you can see there you start moving into stocks that don't have the support of both of those secondary indicators. So in the case of Wesfarmers, you've got the pivot point turning down, likewise with Transurban, which would just suggest that these stocks are now starting to run into some level of resistance, whereas these names here with both arrows pointing up still have both sort of positive momentum indicators there moving higher. On the short side, so that in reverse, if we look at say Aristocrat, which has two red down arrows, so this will show us where the stock switched to sell signals. It's under a negative pivot point, and we had a close below the average today. So another example there is Medibank. Same thing, it's switched to sell conditions, it's under a negative pivot point, and the close was below the average. So if you're looking for short trades where the momentum's starting to falter, you look for these two negative red arrows there. Thank you for listening into tonight's recording. It was a slightly different format, so what we did tonight was focus on just the stocks that have recently been posted on the blog. We've gone through and identified the likes of BHP and Rio that you want to, and Macquarie as all sort of stocks that are leveraged to the XJO, breaking out of that and moving that pattern we looked at and moving a little bit higher. From a value standpoint, we like Woolworths and Coles. Lendlease, we're starting to see some positive momentum there as the market turns to some of the stocks that have been left behind. So you're seeing the likes of Lendlease, QBE rallying higher. Orica's under buy conditions, whereas IPL's under sell, but we like both of those, and you might just want to make a note of those and have a closer look at them. The likes of Brambles, we continue to see an opportunity there, albeit it is a little bit expensive. Coles we covered. Star Entertainment, SGR, so you want to make a note of that. And Illumina, which we covered tonight. Now the reason why I haven't covered the full 100 stocks tonight is tomorrow we'll publish our monthly top 50 recording. So I just wanted to use tonight as a way of focusing on those recent blog posts and introduce you to the trade table, and we'll get the ASX top 50 monthly recording out for you tomorrow. Thank you for listening in.